In this video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. And what we can see is that we have a market which at the moment is currently testing a quite strong area of monthly resistance. This was previous monthly resistance here, again here. At the moment, the market is testing exactly the same zone from which there is the possibility of seeing some potential bearish price action developed away from this zone. However, at the same time, we can see how the market just tested the zone. So before that could happen, we will need to see a deeper test of the area, meaning we could expect a bit more bullish price action to be developed as happened here and here for a deeper test of the zone. Now, if we drop down on the weekly time frame, we can see how we just had a very strong impulse to the upside, and at the moment the market is starting a correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a 0.32 Fibonacci retracement exactly at this zone, which we do expect the market to potentially go and test before then getting rejected to the upside, considering that since it is lining up with this previous resistance turn support, this creates confluence of support at this area, meaning that we have an increased probabilities that we could potentially see the test and then a potential rejection to the upside. Now, if we go down on the daily time frame, we can see that if we will actually see this move to the downside for the market to go and test that confluence of support that we have just identified, that would also create an M pattern here on the daily time frame. And after the creation of an M pattern, what we could expect is a potential rejection to the upside, because after the creation of an M pattern, you would expect at least the completion of the pattern at the neckline, which is previous support turned resistance. Meaning that if we will have the creation of this M pattern, we have an increased probability of seeing a potential reversal to the upside. So if the market will actually provide this M pattern, how we could be approaching a potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential reversal higher for the completion of the M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure to drop a like in a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.